Welcome, everybody, to the Orange Wheel podcast, the podcast where we support business leaders in understanding the monetary transition. My name's Ted, and I'm joined here today by Daniel Parkinson. Daniel and I had the opportunity to meet at Cheat Code in Bedford. That's Peter McCormack's Bitcoin conference, Bitcoin-only conference. I think it's the largest one in the UK. And we really hit it off quite well. Had a good time, drank some beers, had a fun experience there, watched some football, and have stayed in touch since. And so we haven't really caught up in a while now, Daniel. So great to see you, and thanks so much for coming on the pod.
Oh, pleasure. And yeah, it certainly was a good day back in April. Seems like a long time ago now. But yeah, a pleasure to be here.
Fantastic. So it'd be great to kind of get a for the audience to understand kind of a little bit of your background and your kind of designation as your kind of brand you're building around being called the Bitcoin IFA. And sort of what sparked your interest in pivoting from traditional finance into the Bitcoin space?
Well, so I'll give you a very, very quick summary. So I built a career in advertising and strategy and marketing and ad tech and startups, and left that at the very end of 2019. Did a bit of traveling and then ended up in Lebanon volunteering in refugee camps. So I was teaching English and football in a couple of refugee camps over there for a year, and ended up staying in Lebanon for about 3 years. And while I was there, Lebanon was experiencing hyperinflation. So their currency lost about 99.9% of its value compared to the dollar in 3 years. And so I found Bitcoin. The only people that weren't running around like their pants were on fire were those that were in Bitcoin. And having found Bitcoin and then having this newfound, once you go down the Bitcoin rabbit hole, you start learning about the history of money, where money comes from, all of that stuff. And so I decided to pivot into traditional finance. So I retrained as a financial advisor, and I joined one of the large restricted networks in the UK. So what that meant was I could only recommend funds from the company that I was working for. And I did that for about 9 months. But after about 3 months, I realized I was harming people rather than helping them. I was putting them into funds that returned anywhere between 2 and 6% a year, and I'm keeping one of them, right? And as we know, in the Bitcoin community, your real hurdle rate is probably somewhere between 10 and 15%, depending on which geography you're in around the world. I think the UK is around 12%. So if you're not returning 12%, and side note, if you're not getting a pay rise of 12% every year, you're falling behind in terms of purchasing power. So I couldn't allow, I saw some financial advisors in that environment who were Bitcoiners. So they were telling their clients to invest 100% in this fund that returns 5% a year, whilst they themselves are investing in Bitcoin. And I wouldn't allow my integrity to do that. So that goes against everything that I stand for. So I left and I founded the Bitcoin IFA. So Bitcoin IFA in the UK stands for Independent Financial Advisor, meaning that you can recommend from the whole of market rather than just restricted funds for the company you work for. So to be clear, I have never been an IFA. I am no longer an IFA, or I am no longer a financial advisor. I am qualified, but no longer regulated. But the Bitcoin IFA is a bit of a brand name, creates some debate, puts the cat amongst the pigeons, shall we say.
Very cool. Yeah, thanks for that background. Really interesting to hear about your time in Lebanon and they've always suffered from, I guess, high inflation, but in particular in 2020, 2021, 2022, I remember there was some pretty catastrophic events happening there. And I guess also with the refugee crisis. So yeah, very fascinating pathway into Bitcoin. I imagine that you kind of, like all Bitcoiners, we kind of face some degree of resistance when kind of trying to go and educate new people into this emerging future of money and future way of savings technology and investing. What kind of resistance or skepticism have you experienced? What's the typical myths or fears or uncertainties that people tend to encounter when beginning the journey?
Great question. So as soon as I put my head above the parapet and said, look, I'm a financial advisor or an ex-financial advisor and I want to come and train you on Bitcoin. Immediately, all of the financial advisors who are Bitcoiners gravitated to me. So I've had, probably, I don't know, 5% of the population of financial advisors. I'm just spitballing. I don't know the exact figure, but I've had a number of them reach out to me and they want to get trained. They want their teams to get trained, their firms to get trained. Then there's a large portion of, so let's call them the green lights. There's a large portion of amber who just don't know enough about this space. And then there is a very vehement percentage who are red lights. So as we know, Bitcoin is for anyone, but it's not for everyone. And I think those red lights are always going to be red lights, certainly for the next 5-10 years. And it's the classic things, right? It's they've taken their information from headlines, very little research, and it's a Ponzi scheme. It's a bubble. It's never going to work as a store of value or money because it's too volatile. It's too volatile. It's only used by criminals. It's not backed by anything. I can't put a value on it because it doesn't have an income. Therefore, it doesn't produce an income. It's not like a stock where there's a floor price because of the dividends. You name it. I've encountered all of it. But the classic one of it's got no value. Therefore, I don't know how to value it for my clients. And I'm like, it's trades 24/7, 365, and the market right now is telling you it's worth $109,000. That's the value of it. But, yeah.
Yeah, totally. And I think it's interesting you bring up the kind of green, amber, and red. And I think it's something I've experienced as well, this kind of green light community. It's a good analogy you brought up, once you put your head above the parapet. Yeah, I think because I think there's a lot of latent Bitcoiners out there, and until it takes kind of one person in a certain community to kind of stand up, and then other people will indeed kind of go and support and get behind. So I think it's an underappreciated aspect of the Bitcoin community. And my own thoughts on the red lighters is I think there's some people that just, I think they're constantly looking for excuses, right? I think some people actually believe, yes, if this one issue gets resolved, then yes, I'll be on board. They actually willing to change their mind. And I think other ones it doesn't matter how many answers you come up with, they're going to come up with new problems, right? So it is interesting just to see that kind of spectrum of characters out there in the world. So what are you like? What's your approach in the UK market? What do you find kind of works in terms of providing that education in a way that kind of does create a mindset shift amongst let's say those amber lighter people?
Yeah, that's a really good question. So what I've done specifically is I've deliberately chosen financial advisors as my distribution model, right? Because the numbers vary, but there's around 30,000 financial advisors in the UK, and they look after somewhere between, I don't know, 100 and 300 families each, right? So I think the figure I've seen is 9% of UK adults took professional advice in 2024. So if I can just reach 30,000 people, I reach 10% essentially of the UK adult population. So like 6-7 million people. And what I've specifically done is focused on how you can get Bitcoin within professional advice. Now, it's quite tricky. There are some difficult routes to market, but it is possible, and the regulation is changing. So what I've done is focus on how you can hold Bitcoin within tax wrappers, which is really why you go to a financial advisor, right? To talk about your pension, to talk about tax incentivized saving schemes. Like in the UK, we call them ISAs, which are individual savings accounts. You get a 20k limit per year that you can invest in that, and it grows free from capital gains. So what I've really tried to do is focus on those two areas where people really go to financial advice, so that advisors can actually advise on these, what we call assets or funds, so either AUM, assets under management, or FUM, funds under management. So advisors are never going to speak to their clients at the moment about their clients buying on-chain Bitcoin and cold storing it with multi-sig and all that stuff. Firstly, it's outside of their remit, but secondly, it's still technically not able to be advised on because of the classification by the FCA. So it's classed as what's called a restricted mass market investment, which means that technically you can't give advice on it because it's kind of unregulated for advisors. So what I've done is focus on there are routes to get Bitcoin through ETPs, exchange traded products, within regulated advice. So I've focused purely on that. If the advisors want to talk about on-chain, I will give my time. I'm very, I've forgotten the word. I'm very generous with my time. So I'll talk to them about that. And then if they have clients who specifically want to talk about on-chain and buying large quantities and that kind of thing, then I will coach their clients. And depending on the volume of the work, maybe I charge a fee for that, maybe I don't. So really what I've tried to do is shoehorn in Bitcoin ownership within the framework of which advisors currently exist. Because what I'm thinking is ultimately, Ted, we want everyone to have self-sovereignty, on-chain Bitcoin, right? Non-confiscatable, permissionless, anonymous, all of that stuff. But it's going to be baby steps, right? It's going to be 5-10 years before advisors have the frameworks, the rails to be able to actually, if you go to your advisor today and say, I want to put £20,000 into my ISA for this financial year, and I want to buy on-chain Bitcoin with it. Well, that's not possible within the current frameworks. But ultimately it will be. But so what I'm doing is, baby steps exist within the framework because the advice profession as a whole is quite against Bitcoin. So I've tried to fit within their existing frameworks. I'm not trying to reinvent the wheel. I'm trying to give them the access to understand Bitcoin within a framework they currently understand. 1, 2, 3 years down the line, that will start changing and we'll start talking about how to buy it on chain within your tax wrappers, etc., etc.
Great. That helps to answer the next question I sort of had, which is kind of understanding where most advisors kind of get stuck, where the hurdles are. And I guess you've kind of framed it quite well in the sense that it's kind of like there's some regulatory restrictions in the sense that certain restricted accounts or registered accounts are restricted in terms of what kind of assets they can invest in. And certainly self-custody Bitcoin doesn't fall into that category. It's the same thing in Canada with tax-free savings accounts and so forth. I'm surprised to hear that it's £20,000 per year and the capital gains free. That's pretty huge. I think in Canada it's like 6,500 or 7,000 now. So it's actually a pretty good system there. So that's
they're coming for that. So there are rumors that it's going to get changed in the current or the upcoming budget. So it's going to get so you can do cash or stocks and shares, right? So you can put 20,000 in one, or you can put 10,000 in cash, 10,000 in stocks and shares. Your limit is 20,000, but they're talking about reducing the cash element to 5,000 to incentivize people to invest in the stocks and shares side. But they're also then saying they might put restrictions on where you can invest, and it has to be on like UK companies, and they're just fiddling with the whole thing. Yeah, the regulatory side is something that's worth touching on. So we've recently had changes. So in 2021, FCA, which is the UK's equivalent of like the SEC in the US, so that's the regulator, they put a ban on exchange traded products in 2021, right? The price of Bitcoin was $10,000 at the time, I believe, and they have just lifted that self-imposed ban, right? So and if you want, we can touch on, we still can't buy ETFs, but we can buy what are called ETPs or ETNs. And that was a self-imposed ban by the FCA. So Bitcoin has always been accessible. You've always been able to buy Bitcoin, but it's forced you to go on-chain, offshore exchanges. It's basically forced you into more difficult, more opaque, challenging environments for most people. That ban has been lifted, right? So as a retail client now, so not a what's called a sophisticated or professional investor, which basically just means you've got £500,000 in assets, right? So you don't actually need to be sophisticated, you just need to be wealthy. Retail clients are now able to buy Bitcoin within their tax wrappers. So within ISAs, within their SIPs, within their pensions, within general investment accounts. But because it's still classed as a restricted mass market investment, we've got this situation where me, as a retail client, I can go and buy on chain from an exchange and self-sovereign, self-custody. I can go and buy an ETN in my tax wrappers or in my general investment accounts, but I can't go to an advisor and have them advise on it. It's honestly, it's absolutely bonkers at the moment. And there is, because of that uncertainty, most advisors still won't touch it.
Yes. Okay. Very fascinating. And I was actually going to touch on the FCA's lift of the ban on ETPs. So maybe it's worth touching, I guess, a little bit on this. Like, what is the distinction between an ETF and an ETN?
Great question. So an ETN is a debt instrument. Actually, no, let's start with the fund. So an ETF is the equivalent of, say, buying a share in a company. So let's say, let's make the numbers really simple. An ETF has 100 customers, each of whom have bought one Bitcoin. So the fund in total owns 100 Bitcoin, and they have 100 clients who own one each. You technically, with an ETF, own the underlying instrument in the same way that if Apple only had 100 shares and 100 customers and each person owned one share, you own 1% of Apple, right? With an ETF, you own 1% of that fund and you own 1% of the underlying asset. So the fund is just a wrapper to hold this thing for you. They have to have bought the underlying asset and the asset is yours. Now, obviously, there is still third-party counter risk in that, you know, they hold it for you. So where are they holding it, etc. But it is technically yours. The Bitcoin itself is yours. Now, with an ETN, that is a debt instrument and a promise to pay, right? So a good analogy here is, let's say you own your house outright. You own your house mortgage-free. But let's say your house is wrapped within an ETF wrapper. Doesn't matter. When you sell the house, it's still yours. You own the house, the money comes to you, right? Within an ETN, let's say your house is wrapped within an ETN, and you still own 100% of it. You don't own, you own it mortgage free. You don't technically own the house. What you own is a note, exchange traded note. That's what the N stands for. You own essentially an IOU from the owner of the ETN to pay you the value of your house upon sale, right? So with an ETN, you don't technically own the underlying instrument. So let's use that same number again. There's 100 Bitcoin in the ETN and 100 customers, and each customer owns one Bitcoin. Now, within a traditional ETN structure, the ETN provider doesn't actually have to own 100 Bitcoin. They just have to be able to pay you the price of the Bitcoin when you sell it, right? So that's the technical distinction. Now, it's worth highlighting that in Europe, all ETN providers have chosen to buy the underlying asset. They have chosen to hold it in a third-party company so that if they go bust, the Bitcoin technically exists. And in the UK, we've actually called them CETNs, so crypto ETNs. And within that framework, they have to buy the underlying asset. So what that means is, so there was a lot of uncertainty about this when it was announced the ban was being lifted. But what that essentially means is that ETN is now operating like an ETF. The difference is you don't technically own a portion of the fund as you would do with an ETF. You still only own a promise to be paid the price of the instrument when you sell. The reason why the FCA have just lifted their self-imposed ban on ETNs. The reason they haven't allowed ETFs is because we have a ruling which is still European wide. So it's a hangover from when the UK was still in the EU. And it's called UCITS rules. So UCITS, I think, UCITS rules. And what UCITS rules say are within a fund, you can hold each instrument within a fund can have a maximum 20% exposure. So what that means is within a fund, you have to have a minimum of 5 products or 5 things. So what they're aiming for is diversification within funds. So what that means is you can launch a Bitcoin ETF. There are Bitcoin ETFs, but retail can't access them. You have to be what's called a sophisticated or a professional investor, which either means you need to be a trader at JP Morgan in the City of London, and or you need to have 500,000 in assets under management. So you just need to be really wealthy. Then you can access ETFs. That's not a problem. But retail can't access ETFs because ETFs aren't diversified enough.
Yeah, if they're a single asset or two asset sort of thing. Interesting. Okay, that's great clarification. I've heard the distinction before, but that was a really great explanation. And that's the first time I've understood the rationale as to why it's ETNs and not ETFs in Europe. And it does seem a little bit absurd, right? This idea of making it very exclusive for only wealthy people to get access to these things. Yeah, very cool. So since this recent ban has been lifted, have you experienced kind of a narrative shift? Have you noticed that the sentiment towards the asset, towards Bitcoin, is changing at all, given that the regulation is a bit more open now?
Very slightly. So in terms of financial advisors, it's becoming more on their radar. Right? They're aware that these things are happening, but we're also in Q4, which is a very busy period for them, and it hasn't really changed their interest. It's just slightly more entered the zeitgeist. That's terrible English, but I think you get the idea. It's baby steps. It's just becoming slightly more on their radar. What I am starting to see, so there's wider changes, right? So for example, I spent last weekend in London and I saw digital advertising on the tube, on the London subway, for ETNs. And in fact, someone else sent me a picture of them from Bank Station, which is basically the epicenter of the financial world in London, in the City of London. And there was huge digital adverts for Bitwise, so for their ETNs. And as a consequence, what I'm starting to see are more and more financial advisors reach out to me saying, my client is approaching me. So I think the shift here is hopefully going to be led by retail. So it's going to be led by people going to their financial advisors and saying, why aren't we talking about Bitcoin or other crypto digital assets? And because I can now buy them. And something that I'm trying to say to advisors, and not all advisors are on the pulse, and not all of them have even seen that these changes have happened. And what I'm trying to make clear is your clients can now buy Bitcoin in their tax wrappers with or without your professional guidance. And I would much rather that it was with. I would much rather that when your client comes and says, let's talk about Bitcoin, that you don't just dismiss them. You can have a good conversation with them. And I want to be clear, you can have a good conversation both pro or against, right? If someone has a very good reason not to recommend Bitcoin, that's fine. But you need to be able to have the conversation rather than saying, it's still technically unregulated, I can't talk about it. And well, then your client's just going to go and do it themselves, which can lead to a lot of problems if they're not aware of certain things. For example, the historical 4-year cycle, right? So advisors have very, very little knowledge. And I think as Bitcoiners, Ted, we can sometimes forget what it was like when we were taking our very first baby steps into Bitcoin, right? And so, something like the very historically observable 4-year cycle, we have, if this cycle plays out like previous cycles, we have let retail back in at the top, right? So the FCA banned Bitcoin when it was $10,000 a coin. They have protected us from 11x returns in 4 years. It's now $110,000 a coin. And if this cycle is to play out, we're either already in distribution or we're expecting a very explosive Q4, but then we would expect a sort of 6 to 9 to 12 month bear market in 2026 if it plays out. So even something as simple as that, I'm trying to explain that to advisors, being like, if your clients want to go in, no problem, but it's a minimum 4-year hold, minimum.
Yes. Yeah, I think that's the important thing is that I think the challenge personally I feel is like when I first got into Bitcoin, I also was kind of like, even though I understood the long-term potential of value, I still got caught up in the short-term volatility. And I was like, oh, I can like get in, get out, make a lot of money trading. And that's not the right mentality to have with it. I think that people are only going to lose value by trying to time things, right? And you really have to have that long-term perspective. I think timing an entry might make sense, right? But certainly not selling when it drops 20% with an expectation to buy back later on. So yeah, I think there's a lot of value in having that kind of underlying conviction and thesis in really the long term.
I'm going to challenge you slightly on the entry point. Some of there's a slide that I show in my training, right? And it shows that if you were the single unluckiest person on the planet, you were the worst trader in the history of Bitcoin, right? So let's say you bought one Bitcoin at the literal second of the top of each cycle, right? You would currently have 4 Bitcoin. They would have cost you roughly $90,000, right? So 69 in 21, 19 in 17, 1200 and something like 200, something like that, right? So it's $90,000. As of today, those 4 Bitcoin are worth $440,000. So even if you massively make a mess of your entry, just hold it. Time in market wins.
Certainly, exactly. And I think that long term perspective is really the key thing, right? Is really just getting in and staying in and seeing it as savings and not a trading vehicle. Yeah, really interesting analysis. I'd actually like to see that one. And I think we lose appreciation. I think that's also why Michael Saylor is like, I'll just keep on buying the top, right? What are your thoughts on corporate adoption of Bitcoin? And you mentioned earlier that you're an investor in Smarter Web, so maybe some perspectives on that company in particular.
Sure. So, I mean, it is something I slightly touch on in my trainings, and I say, look, it's not really my area of expertise, but it is something that is available for that financial advisors need to be aware of when they're speaking with their clients, because a bunch of their clients are going to be successful, what we call limited company owners, right? So I think in the US they call that an LLC. So it's essentially a separate entity of a company, right? You can hold Bitcoin on your balance sheet. So there's a couple of questions there, Ted. So firstly, there's the Bitcoin Treasury companies. We'll touch on that. But there's also mum and pop shops. Me, I'm a solopreneur, but I have a limited company, so I can buy Bitcoin on my balance sheet, and it serves a couple of purposes, right? And it's a great savings vehicle if I don't need the money in the next 4 to 10 years. If I have a bad year, a few years down the road, I can sell some Bitcoin and supplement, whatever I need in terms of outgoings. Further on down the line, let's say I retire, but I can continue to sell Bitcoin and pay myself dividends in the future, right? So it offers all of these sort of opportunities. And I mentioned that in the training because financial advisors need to be aware for their limited company owners. Coming to the Bitcoin Treasury companies, I'm slightly conflicted because there are more intelligent people than me that I've read that are saying that they have quite a lot of the hallmarks of some of the instruments that came out just before the 1929 crash. And I've like partially read this one article about it a number of times, but it's like a 30-minute read. And so I need to go back and properly digest this thing. Fundamentally, I think they're completely disrupting traditional finance, right? So when you look at what MicroStrategy are doing, and one of the things on my to-do list is to write up a really good document PDF about what strategy are doing with things like Strike and Stride and because I don't fully understand them. And so to understand them, I want to produce something for other people, for my audience to sort of download. It's also a great lead gen. So I don't fully understand what they're doing there, but I totally the macro of it I understand, in that they are essentially producing bonds or like competitors to bonds and cash savings vehicles for companies at much higher interest rates. because they're backed by Bitcoin.
Mm.
And they're also coming for the equity markets, right? So Strategy might get onto the S&P in December. If they don't make it in December, I think it will be a couple of years before they do, because I personally still believe we've got a bear market in 2026. And it's a fundamental shift. What an interesting time to be alive, right? We live through crazy times
Certainly.
watching this new magic internet money disrupting traditional finance and then coming for the equity markets, these like 300-400-year-old entrenched
Mm.
behemoths in traditional markets, and they're coming for it. I think it's an interesting time to be alive. I think we had a bit of mania during the summer. So like, we're recording this in October. We were recording this on
Halloween.
Halloween.
Yeah.
And 3 or 4 months ago, we had that mania phase where
Mm.
a lot of treasury companies started to act like altcoins and have their share price has acted like altcoins. We had a lot of people rushing into the space trying to capitalize, some of them nefarious, right? Some of them I think are very good actors. My personal opinion: Strategy, Metaplanet, Smarter Web in the UK, I think is it Capital B in France, H100 in Sweden. Like, those guys I think are very good, but there have been some nefarious players, have caught out a lot of people. I mean, me personally, I'm significantly underwater on Smarter Web. I got caught up in that mania phase,
Mm.
euphoria,
Mm.
but I'm reminding myself it's a 5 to 10 year play, so that's
Mm.
fine. Just sit and
Mm.
hold.
Mm.
And I think we're going to see some consolidation. Right? There is going to be some consolidation. Some of these Bitcoin treasury companies are either going to go out of business or they're going to get consolidated into other ones. And it's going to be very interesting. I'm a little bit concerned that the average retail investor who doesn't know what they're doing may get burnt with these and then have that used as an excuse or an example why there needs to be further regulation and people need to be protected from investing in these things. So
Mm.
I'm overall very positive about
Mm.
them, but I am concerned that, like anything in life, there's going to be bad actors, and it'll be interesting to see how that plays out.
Yeah. Really great perspectives, really balanced view. I think we have to be, understand that there's good aspects and dangerous aspects of anything. I also have a small exposure to a diversified portfolio of Bitcoin treasury companies, and I'm also, probably underwater, but thinking about, the long term potential disruptivity to the preferred stock and credit markets. So I think it's very fascinating. I'm totally with you in many of your perspectives there. So let's discuss the first part you brought up, which was talking about the model where companies use Bitcoin as a reserve asset without necessarily doing the MicroStrategy playbook. So how do you envision these companies to adopt Bitcoin if they might not have a situation where it's an individual owner with a concentrated ownership to be able to direct the company, but more diversified board where they need to come to a more communal decision to take this step?
Yeah, it's a really good question, and I'm going to be spitballing total opinion piece. I don't know. I've never been on the board of a company, but what I would say is Bitcoin rewards nimbleness, first movers, curiosity. So, solopreneurs, mom and pop shops who decide to put Bitcoin on the balance sheet are going to be rewarded earlier than larger corporations where they have boards and potentially have a lot of, I don't know, regulation, due diligence, whatever it is to go through, whether they, do they need 100% consensus? And so if you just have one person who's like, this is a Ponzi scheme, I'm never voting for this, do they not adopt Bitcoin as a treasury asset? I think we were speaking previously about, it's been about a year at this point since Michael Saylor presented to Microsoft, and Microsoft decided or chose not to add Bitcoin to their balance sheet. So the ones who move are likely to get rewarded earlier than the ones who don't. What I would say is, if you have cash on your balance sheet in your company that's returning 3% a year in interest, I show stats in my training that says It's from a website called nakamotoportfolio.com. Highly recommend people playing around with that website. What it shows is if you'd have kept your treasury as cash since the 1st of January 2020 to, I ran the stats to the middle of August this year. If you'd have kept your entire treasury or your bankroll, whatever it is, as 90% cash, returning 3% a year, and 10% Bitcoin, you would have returned 158% or 18.55% per year. That's better than any fund. That's better than any fund out there. And 90% of it is safe as cash. So if you have sums of money on your balance sheet, I would certainly suggest doing your own research. I'm never going to recommend anyone ever buys Bitcoin, but I would percentage of that cash as Bitcoin. So you can keep the majority of it as cash, safe, other than the fact it's been eaten alive by inflation, but it's safe. It will always be that cash. And then a percentage as Bitcoin. And the reason I show these stats in my workshops is because the reason I show this in my workshop, that's really key for, say, decumulators. So people that are in their 60s and their 70s and are drawing money out of their pensions and their savings rather than accumulators in their 40s. You obviously need some protection from volatility. If you've got £1 million in your pension and you've got 30 years of retirement to plan for, volatility can go against you. So actually, what you probably want to do is sell some of that investment to cash. Let's say you sell 10% of it, 100,000 of that million to cash to ride out any short-term volatility. And let's say 100,000 represents 3 years of spending. But if you just move 10% of that, 10,000 of that 100,000, which is like 1% of your overall portfolio, if you move that to Bitcoin, that 10% in Bitcoin will outperform any fund in the world over 5 years based on historical data. So would apply that same logic to a business. We're going to keep the money in the short term to ride out any volatility. Let's say you have a bad year, whatever it is, then keep the majority as cash, but move a percentage into Bitcoin as a hedge, at the bare minimum as a hedge.
Yeah, really, really fascinating. I think you're exactly right in the sense that the same sort of technical return logic should work for most people. I mean, it certainly work, as you brought up, for like individual retail investors, and of course the allocation is going to differ based on where people are in life. But it should apply very much to corporations. And it's good. It's interesting you brought up the Saylor presentation of Microsoft, right? Which was I remember like doing screenshots of that when it was being live streamed. And of course, it was put on to the website later on. But I was like, this is amazing content. But yeah, I mean, I was also very surprised that Microsoft elected not to, because it wasn't even that decision point wasn't even to put Bitcoin on the balance sheet. It was to explore and do a study to determine if they should do it, right? And they elected not even to do that, right? The other thing I found surprising about that was that BlackRock is like 5 to 10% of Microsoft, and they voted against it, even though they have the ETF that they probably would have bought had they done it. So I think it's interesting in that regard that there's this is just a default mode from the investors to just say no to this for now. But no, I think the technical aspect is an important one. But it seems like no matter how much technical return you can kind of demonstrate, there's going to always be, at least for now, it just seems like the resistance is there and the unwillingness to take the risk. And I think it's really good what you brought up, talking about holding cash has no risk, but you guarantee losses, right? It's a guaranteed negative return, but people would still rather take that than something that's perceived to be very volatile. So it's an interesting conundrum.
I think the reason why is because people are force fed this 2% target. So inflation, put another way, a tax on your future earnings or your future value of your money is allowed at 2%. But I mean, in the UK and globally, inflation, headline inflation, CPI, has been nowhere near 2% for 5 years. But when you factor in the 8% currency debasement on top is probably around 4%, add in 8% currency debasement and you're at 12%. I think if more people knew your money is losing purchasing power at 12% a year, I'm getting 4% in my bank account. Like, you're still losing 66% of your purchasing power. Yeah.
Yeah, it's really frustrating. I find, right, with the kind of people feeling like all those layers you brought up, right? First of all, 2% itself is arbitrary and it should never be positive devaluation of our currency in any case, right? The natural state of the free market is deflation, which is a healthy thing. And then on top of that, they lie about the figures. They massage the numbers so it's lower than it should be. And then on top of that, the figure doesn't even match the actual phenomenon of monetary debasement. So I'm totally with you. It's crazy. But I also wonder, like, there's probably still also financial literacy is so low that some people, even if the headline inflation was 12%, there'd probably be some people that still just don't even recognize that is the relationship between that figure and their currency devaluation, right? So I think a lot of people don't understand the source of price rises in the market to begin with. A lot of people still feel like, oh, it's the greedy grocery stores, it's the greedy corporations, it's
It's the billionaires, it's the foreigners. Pick your thing.
so what do you think about and you think like 5 years from now, let's say, right? How do you envision kind of the world of your clients, the networks you're trying to build, the Bitcoin IFA? Where do you expect the market to be in 5 years, and your business as well?
Great question. Honestly, I don't know. I think 5 years from now, there will be financial advisors who have won because they've given their clients some Bitcoin exposure now, right? And so, like, I make it very clear that if advisors, having done their research, are going to give their clients some exposure, I say start small, 1, 2, 3%, right, of portfolios.
Mm-hmm.
But you and I both know that a 2% allocation to Bitcoin now, 5 years from now, that might look like anywhere between 20 and 50% of the client's portfolio, and the portfolio has grown very nicely.
Mm.
So those advisors will win, in my opinion, and they will start to win assets, well, clients. My inbox is full of young, ambitious advisors who want to come and work for the Bitcoin IFA. And I'm like, I'm not a financial advisor. But they want to come, these people in their 20s.
Mm.
Most advisors in the UK, the average demography is a 55-year-old man. So there is a younger generation coming up, and they want to talk about this with their clients. And they want to work for firms who are progressive and discussing these things. Those firms, those advisors will win. And so I genuinely think 5 years from now, like, my business is going okay at the moment, right? 5 years from now, I will be falling over myself with people coming to me saying, I desperately need to catch up on this thing. I listened to you 5 years ago. Tell me about it now.
Mm. That's great, and I think that's it's a risk worth taking, right? Because I certainly feel it as well. Like, once you have the conviction of Bitcoin as a Bitcoiner, as kind of putting your own wealth into it, and then starting your own business, I think it takes a lot of bravery and courage to begin doing that. But then, as you have, but it's kind of like putting yourself out there and realizing, okay, I might get a lot of no's, but then people, once it does click in their head, they're gonna have your name in mind, right? Like. So I think I certainly believe it's a risk worth taking to try to be ahead of the curve rather than trying to be behind it. I think it's the better positioning. You mentioned the kind of generational divide a little bit. So the people kind of coming to you certainly on the employment side. So what's your kind of perspective about is there a generational divide in terms of receptiveness to Bitcoin, and maybe where, any comments on the source of that, and how you think it's going to play out in the future?
So yes, there is. The people that I've trained and the people that have come to me are actually quite a wide spread. So the main thing that I have found, denominator of people that want to come and explore Bitcoin training with me, is curiosity. And that curiosity knows no demography. It's kind of binary. You're either curious or you're not. It doesn't matter how old you are, whether you're a man, woman, etc. That being said, the younger generations are the ones that are more receptive to having, say, cold outbound, right? So like the ones that have come to me, widespread demography, doing cold outreach, it's definitely people in their 40s or below that are very receptive to this. And to me, that kind of makes sense. So, if you're a 55-year-old man, men are more stubborn than women. If you're a 55-year-old man who's been in financial advice for 30 years, right? And financial advice is a really interesting career in that you spend 5 years hunting and then the rest of your time farming. So you've done the work. All the really hard work is front weighted to build your book of clients. Then it's just about farming, right? And maintaining. So you've done all the hard work. You're 30 years in. You and your clients have done very well from the money printer. You're all very wealthy in fiat. You need this new magic internet money, right? I understand where they're coming from. But the younger generations, the 20, 30, 40-year-olds who are still building their clients are likely still trying to build their own wealth. They're looking at this current situation, especially if they're in their 20s, right? The average house price in the UK is now 10x the average salary. And they're like, I can't afford to buy a house. I'm trying to win clients who can't afford to buy houses. So there is, and in any generations, right, you fight the generation above. I was having a conversation recently. I'm 42, right? I went to London over the weekend with a friend. And we were walking around London and I was like, everyone's wearing baggy jeans and New Balance. Now, in my generation, that basically meant that you were a middle-aged American tourist, right? So, like when I was 20,
probably true, right? Yeah.
When I was 20, if you saw someone in baggy jeans and New Balance, they were typically a 40 or 50-year-old American tourist, right? Okay. But now I'm 40, all of the 20-year-olds are wearing baggy jeans and New Balance. So every generation does something to sort of claim something back, fight back against the older generations, right? So my generation, I was thinking about this, my generation reclaimed Converse. So Converse trainers were seen as this thing that people wore in the 60s and 70s. So our grandparents wore them. So they were cheap, they were uncool. Because they were cheap, we made them cool. New Balance have done exactly the same thing. So every generation does something to fight back or reclaim something against the older generation. So if you're 20 and you're thinking the average house price is 10x the average salary, in London it's even wider, and this new thing comes along that all the old people hate, you can be like, I'm going to go and look at this new thing, because that's their generation's way of either fighting back or just being more open and receptive because they have other options.
Yeah, there certainly is that kind of necessity aspect. I like the fashion perspective. It kind of shows your marketing roots coming to the fore a little bit, right? And I do wonder, how much of these kind of new marketing trends are sort of like organic in the kind of zeitgeist versus like the marketing masterminds kind of like trying to impose it on us. But it's probably a hybrid of both. Anyhow, Daniel, it's been like a really great catching up. Really appreciate you taking time to talk today. Any plans for Halloween before we wrap up?
I've got a bit of a cold. I'm going to get an early night.
Okay.
Rock and roll Friday, Halloween.
So where can folks that are, maybe they're financial advisors, in the UK, or of course, you probably know these people already, but like if there are people in other jurisdictions, maybe want to get some tips, want to reach out to you, what's the best way for folks to get in touch?
There's three. So I'm Daniel Parkinson on LinkedIn, or the Bitcoin IFA on LinkedIn as well. You can go to thebitcoinifa.com and there's a contact form on there, or I'm at the Bitcoin IFA on Twitter. So it's the Bitcoin IFA. Wherever you go, you should be able to find me.
Fantastic. We'll make sure we put all the contact information in the description. Thank you, everybody, for your attention today at the podcast. Catch everybody in the next one. Thank you very much, Dan, for joining.
Thanks, Ted. Have a great day.